Hey guys, welcome to another video brought to you by Total Control Traders. In case you haven't saw this morning's if you haven't seen this morning's live video, decided to take last week off, extend the long weekend by a little bit, just 2 more days. Took a Friday and Tuesday off from recording, but trading community stayed live. So hope everyone's doing okay. I mean, it's been a bull market since the bounce of that GP, or not GP, the 0.5 right here. Since the bounce over here, nothing new has happened. It's just been a straight bull run as expected from the last video where this bounce begun. So it started from the 0.5, and as mentioned in that day's video, March 25th, that I would anticipate further bull action from here, because bouncing from 0.5, relative strength, and it was a strong bounce. So next day we saw lots of follow through. Anyways, before getting to the market, one thing I wanted to mention, didn't realize that we apparently hit the 150 subscribers right before the Easter weekend. So thank you everyone for all of your support. Thank you for subscribing. Hope you guys enjoy the content. Been starting to get messages about how you guys really like what I provide, and I will try my best to continue to provide good content, calling out where the markets are, what the market outlook looks like. The most important, who cares about what happened before, right? You want to know what's going to happen, what is going to happen. That's the most important. We all participate to make money. So the other thing I want to also mention is I have noticed that there's been lack of activities, whether it's from YouTube watches or even in the trading community itself, which could be a good thing, could also be a bad thing, So I just wanted to make sure that I get the message out there. The good thing is you're taking it easy while the market is choppy, because, well, if you look at the market, it's not choppy, but the problem is it is still a stock pickers market. You can't just go out and buy anything and then that'll make money just because the market's going up. Meaning that we are, what I suspect, we are still in sector rotation. And what that means is, if you pick the wrong stock, even with the market going up, you can still be losing money, even if you're playing bull. And that's the worst feeling. So remember, ETFs are an option. There's a bunch of ETFs out there. If you're looking at sector specific or indices specific, there's ETFs for any of them, whether it was 1 time, 2 time leverage, 3 time leverage, bulls or bear. There's still ways to make money. So don't give up. And our motto here at the Total Control Traders is patience pays and persistence perfects. So be persistent, be reluctant to lose, keep at it. Even if you don't make money, you don't make any physical gains, financial gains, you will improve yourself as a trader. So keep that in mind. As a thank you for everyone's support for hitting 150 subscribers, we will be offering the trial period, the 1-week trial period. That will be resuming for 1 week only, starting on, when should we say? Let's do it on Friday. Beginning Friday till next Sunday. So 10 days, I guess. Make sure you sign up if you are interested. It is completely free. 1 week trial period to get a sense of what the trading community looks like, what kind of information you can get there, how it can benefit you or not. Doesn't hurt to give it a try. The worst thing you can do is after you sign up, you don't do anything with it. I get that everyone has a busy life, especially if you're working full time, but at least check it out, a day or two. See what it has to offer. Okay. All right, let's get into it. So SPX, completely bullish. Here is our daily bull flag. Early, well, not really early confirmation. Did not even wick under the daily 8. From there, it was just a straight confirmation, and now we were seeing another daily bull flag, but potentially seeing that early confirmation right now. Okay, target. We've already overcame all the targets before the 4K to 4050. There was no resistance. There was no pullback whatsoever. Look at this. 4K blew straight past it in one single day. 4050 blew straight past it in one single day again. So the next target is at 4124. The 1-to-1 extension, the most recent, the most accurate, that I would say. Most accurate target from the low, similar with how you would normally run fib extension from the low to the higher high, from the higher low to the higher high to the higher low. That is your fib extension target at 4124.8. And ultimately, the next big resistance is going to be around that 4300. So between 4274 to 4291, we'll call it 4270 to 4300. That is the next big target after 4124.8. Okay, I would expect, because we are a little bit extended from the daily 8, I would expect, especially if we were to come straight up again to touch this 1-to-1 extension, would see some sort of a pullback, at least a touch, maybe a close on the daily 8. So the fib, this fib is not accurate because we are still moving upwards. Now let's take a look at, now remember, we are still missing that back test from this previous all-time high. Okay, if you look back at any of the previous back tests, previous high, back tested and lost a little bit. Previous high, back tested, lost a little bit. Previous high here, back tested immediately, back tested again, back tested again. Previous high here, broke over, back tested here, and then back tested again before we were gone. Here, nope. Okay, so yeah, all of the previous highs will get back tested. So now this leads me to think, if we were to go straight to the 1-to-1 extension, the pullback would be relatively stronger the earlier we get there. We have not made a higher low on the daily for quite some time. This is, I would consider this as a one single move. There is no daily higher low yet, meaning the next pullback makes sense. It might do an ABC instead. Yeah, regardless, we will see a back test of this previous high, 39.91. It's just a matter of when. So as mentioned before, I am skipping this bull play on this, what could potentially be the last leg up. And even though it's stronger than anticipated, regardless, it is still a stock pickers market, meaning with the stock pickers market, you are not going to make money on every single stock. You're going to have to find the right names that are moving. And as of right now, as of today, yesterday, a little bit of last week, it's the big techs that were moving, which makes sense because end of April are the big tech earnings season. The run up into earnings before the sell off into summer lull. Not too sure how to pronounce it. LULL, a summer slumber period. So with that in mind, make sure you're focusing on the right things, whether if it's ETF plays, indices specific, or if you're looking at big techs. Don't just be looking at all growth names, because a lot of growth names are not moving. Okay, let's take a look at NAS. With the NAS, similar idea. We were stuck in between that two short-term wise, in between that two key zone for quite a long time. Now in the aftermarket, we are breaking up. Similar idea with the SPX. See that 2 zone, very similar looking. NAS, we are breaking up over it. Same with the SPX over in the after hours right now, with 1-to-1 extension target coming right up. So no daily higher lows. Would expect somewhat of a pullback. relatively soon. Let's take a look at, this actually lines up with this previous one-to-one, 40 bucks off. So be careful on your bull plays. Now, generally these kind of fib extension targets, we do overshoot it, so as you can see in the last one. If you were to backtest it, you will see a lot of the other ones also overshot it before the pullback. So keep in mind, do not FOMO if you were to sell at one-to-one extension, or if you want to be more certain, watch for that shorter time frame bear divergences. Those are generally the go sign for the bears coming in. All right, that's NAS. Next is Russell. Today was relatively weak in comparison to all the other tickers. You can see a red candle versus NAS green versus SPX green, and Dow was slightly green. So Russell was a notable weakness in the market today. Potential of a head and shoulders formation coming up, with the neckline being this last bull divergence. So the reason why I think, aside from the relative weakness, I always say that Russell is looking bearish going forward is, if you think about it, on a sector rotation, as the market makes new highs after a correction period, people tend to go into more safety, more conservative, whether it's banking stocks or things like that, while the money is coming out of growth names such as tech or even small caps, which is exactly what Russell 2000 is. So with this, head and shoulders pattern is in play. There is a key trend line that must hold. Actually, the key trend line is right here, the neckline of this pattern. It is still trending up. So this bull divergence, it did not give me as strong of a move as I would have liked. It is still stronger than a lot of tickers with daily bull divergences. We did go past the GP. So if you do draw a fib here, you can see we passed the GP and unable to break over this key zone. Now with the head and shoulders pattern, if we're to break bear from this neckline, so let's just drag it out. This is going to be the key neckline or the key trend line that we're going to be watching. First, right now, I am in bear position. What I'm looking for is that right here, top of the key zone, which lines up with the 0.5 of this whole move. I want to see what the reaction looks like over there. If that is lost with bear volume, next one down, GP is right in the middle of the key zone, so I don't really care about that one. It depends how fast we come down. We could just drag out kind of thing. I don't really see that happening. But 0.5 is tomorrow, day after, before the end of the week, I would anticipate. And then from there, we will be looking at the lower key zone, which lines up with this trend line from before. Let's see what the reaction looks like over here. Let's draw make sure we do an indication here. Then from there, the must hold is the neckline. If this is lost, I would anticipate further follow through down to the next key zone below, which from the lower part of this current zone that's coming up, we are looking at another 6% drop. And the next is Dow. Meh, nothing's happening. Sideways actions. You could call it a daily bull flag. No volume whatsoever. Next target up, we are looking at. No, this is the previous target that we did not hit. Okay. Judging by how we didn't hit the last target. What is this one from? Oh, we did. Okay. So we hit the one-to-one extension target. Now from here, the next target up. Oh, come on. We are looking at 34.76. Are we going to hit there? We could. If SPX gets to 43,000, 4,300, we could very well hit there. Right? Now, let's take a look at the leading indicators. In case you didn't watch this morning's live, we're going to do some indicator watching to see where hopefully get some indication of where the market is going to go. So with this US 10 year, just wondering if we should do US 10 year first or US dollar. Let's do the US dollar first. That is my top watch. So US dollar, there is a daily bull divergence forming right now. Today we came back to backtest. Today we came back to backtest this long-term channel. 2 touches on the top, 2 touches on the bottom, multiple touches, multiple resistances here, and now we have backtested it. So today we're gonna need to see that follow through without a rejection from the 88. Ideally break right through that 88. It's not too far away. Yeah, it's not too far away. So US dollar, keep a close eye on it over the rest of the week for indication of where the market is going to go. We do not want it to break down back under this channel. Okay, and on US 10 years bond yield, slight rejection from the 88 right now. There is a daily bull divergence as well, strong daily bull divergence. Let's see if we get that follow through today. I would anticipate, based on this type of divergence, I would anticipate break of that 88 with a little bit more upside before getting rejected from this key resistance. Right around here. 1.746. And then VIX, still breaking down under. Nothing exciting. US gold or gold US dollars, slight rejection from that middle trend line. Okay, channel that's been forming. And we found the bottom from this previous high resistance, support here, and now we're finding support here again. We should probably draw this as a zone, but I was looking at this from a weekly standpoint, and that's a lot easier to see. You do see breaking down under from the last time that this pattern showed up, so we are breaking down under, but we are finding bounce from there as well. Now this key trend line we must break in order to see further follow through. And that's the other one. 1, 2, 3, 4. Oh, no, that's it. So overall, market short-term wise for April, partially due to the big tech earnings, I would say for April is bullish, but going forward, I would look, the more bullish we are in April, the more bearish I would be looking for May, maybe June. Right. Hottest tickers. First one, Bitcoin. Seeing slight weakness showing up, unable to come back to touch this upper trend line for the third time. I was looking at this as a potential rising wedge, but given how far we've ran, you look at this, it's ran from 3,000 to 60 some thousand. Let's take a look. 1,500%. Makes sense. We're seeing a little bit more bearish action now. Now, do understand that the RSI is cooling down and we are still staying relatively bullish. So Bitcoin, keep an eye on it. It could be an indication of where the market is going to go. I'm going to add HIVE to the daily look as well. Okay. So we back tested this previous high, found support there, straight bounce, didn't line up with GP or fibs wise. I don't think it did. Let's take a look. Oh, have that there. Yeah, nothing. It didn't really look like it lined up with it. So this is actually over there. While 1, 2. So essentially we lost the GP by a little bit and then bought up the next day. Well, gap down open, back tested this previous high again, and then now we're moving up. So there's no clear pattern. Not seeing anything clear in here. There was this trend line that's keeping us down. Somewhere around there. So now we have broken bullish from it, and you can see an immediate back test the following day before breaking bull. HIVE overall is looking bullish. As long as the daily 8 hold, that is your guide. Next is Tesla. So sideways action, daily bull flag. We are right on that daily 8. We do not want to see a loss of that. There's potential for a dragged out wedge, as mentioned in this morning's video, similar to the wedge back here. You make a new all-time high and then sideways action for a long time, new all-time high, further pullback, and then sideways action begins. So let's see what the pullback looks like from here. On the hold of the 88, I would anticipate a break of this potential wedge, but bulls want to break this key zone high of 718.43. That would be the key area that I'm looking for a break from. Once that's broken, then we can be looking up at GP between 748 to 758. Next is TDOC. Relative weak. Daily bull divergence did not have too much follow through. Actually, I'm gonna skip. Yeah, I'm gonna skip the details on the hottest tickers because they were covered in great detail in this morning's video. Make sure you check it out if you are interested in any of the hottest ticker names, whether that's BTC, Tesla, TDOC, PLTR, PDD, or W Wayfair. Next is PLTR. And PLTR still seeing relative weakness. We are now trading under the 88 again on decreasing bear volume. From here, let's see. Looks like, well, we got over this key trend line that was keeping us down. We're grinding alongside it. Let's see if I see something a little bit more clear. Okay, so regardless of how you look at it, this is still relatively weak. You would have wanted to see a third touch here, and then a third touch here, and then a bounce back up. But because we didn't have the third touch on that upper trend line, even if we have the third touch on the bottom, when we come back up to the upper trend line, the chance of it breaking bullish is a little bit slimmer now. You want to see a third touch, and then unless we start reversing without giving that third touch on the lower trend line, there's a chance that we break the bull on here. So watch this trend line. Upon the break of this, I would anticipate further follow through and would be looking at bullish position from here. Make sure trend lines are correct. You know, from where we drew it from, that is, let's see, 25 to now, sorry, wrong day, 24.37 to about 25. That's like a whole 70 cents difference. You know, you're doing 200 shares, that's like $140 difference already. And that's why I care about where we draw the trend line, how correct we draw the trend line from. You're looking at, you know, something that's more than enough to cover your lunch, your dinner, and as well as the commission. Depends on what you have, right? Anyways, so next one is PDD. So daily bull divergence, followed by a bounce from the GP, but we are seeing double rejection from this trend line. So there's been 3 trend line from the increasing volume, increasing momentum from before. This most recent trend line, this middle one, is from this last touch of this lower trend line to the bounce. So that was a notable trend line to have on your charts, and we did see double rejection from it. Now we're seeing the follow through from the rejection. So with this, I would say it's a lack. Yeah, somehow I didn't have a fib drawn on this. So I would say this is a lack of bounce. Didn't even get to the 0.382. What happened? Okay. Yeah, so they didn't even get to the 0.382, so this is a relative lack of strength on this bounce, meaning we could potentially see further downside. So be patient on the bull entry of this. Looks like there is a trend line that's keeping us down as well. Oh no. So there is a chance you're going to need to see that reversal tomorrow. If you're playing bull, you're going to need to see that reversal tomorrow. This is the back test. I mean, technically we backtested here 2 days ago, and then we'll break over this upper trend line. Now it's becoming like a little bit like a megaphone pattern. Now we're backtesting, seeing a bounce from this lower trend line that was keeping us down before. Again. This one makes more sense because we gapped up but sold off. So if you look at line chart, you would draw it differently, but we never closed over that line. So, and then with this line, you can see lots more rejections. So it's going to be a stronger trend line from here. That brings the downside potential to a whole lot more now. So it would not be touching PDD. Next is W. Lack of follow through today. Still sideways action. Nothing interesting. Let's quickly cover the moving tickers. First one, FB. New all-time high. Congrats, FB bulls. What do we say? Backtest this wedge. That was your goal signal right here. Backtest lining up with the 0.5 on the day. If you did not watch the video on the 25th, make sure you watch it. I called out on the next day. If you see another backtest of this wedge, a touch of it, even close to it, that would be your complete goal signal. From there, since then, we've gone up 13.13% already. Now we're getting a little bit extended from the daily 8. Tomorrow, if we were to see further pulling away, I would anticipate a pullback to begin very shortly. And looks like it's going to line up with the NAS, touching that 1-to-1 extension target. So if you're in bull positions, you should be, if you followed this and enter bull position on the next day on the back test and the second touch of, this is extremely rare, okay? On the second touch, second back test of a wedge upper trend line, extremely rare. You got in, amazing. Yeah, make sure to start taking profit off. We are getting a little bit extended from the daily 8. Next is Microsoft. And similar idea, new all-time highs. Congrats, Microsoft bulls. So the 1-to-1 extension target is a little bit higher. We're looking at 258.36. So we're going to need a few more days of bulls. There is a potential for this channel right now. Whether it's daily or weekly, daily can be a long-term channel. Weekly is you're looking at rejection, double rejection already. If we were to come back to the 1-to-1 extension target over the next week or two, 1, 2, maybe even 3 weeks. Yeah, so it might take 3 weeks. 258, that would definitely be where you're taking profit from. We are already getting a little bit extended from the weekly 8 as well as the daily 8. So I would already be thinking about taking that first profit off. Next is Amazon. Nice bullish action today. Still essentially in that long-term sideways action range. It's been a long time since we looked at Amazon, so let's clean this up. Oh, a long time since we looked at Amazon. Last time we looked was somewhere February, beginning of February. Okay. So it came back down to this previous key resistance support. Yeah. Lost it by very little bit. Saw rejection on the GP. Wow, that was a strong bear move. 1 to 2 went past the 1-to-2 extension target. Rejection from the GP. And now something's blocking. There we go. Now we are right on that 1-to-1 extension target. We are seeing a little bit of rejection from it already. Trend line wise, I think very notable. This is essentially somewhat in play. But do note that you could be drawing it. There's multiple ways of drawing this. So let's right here. 2 rejections. So we're gonna draw this over here. Okay. So that's why we're seeing a little bit of a stall right now. 1-to-1 extension target alongside this trend line. But I don't like the way it's drawn, you know, real body to wick. I usually like to do real body to real body, or majority of the case, wick to wick. So with this, what they changed the they changed the menu of this. There's a whole lot more options now. Nice. What's stats? Anyways, fool around with that. Extension target, extension line looks like, what is this called? Ray line looks like it's got a whole lot more options now. All right, so with this, potential rejection from the 1-to-1 extension target, extended from the 88, sustained bull volume. You're gonna need to see further sustained volume. If we were to come back to this key zone, key resistance zone, lines up with this trend line, either of this trend line, I would anticipate rejection already. Tomorrow, if you see further bull action, consider taking your first profit on a 1-to-1 extension target, just in case we don't get to the next key zone. So, okay, gonna skip that one. I heard ROKU was interesting. Volume is interesting. Again, it's been a while since we looked at ROKU too. This whole move. Okay, so it didn't come back to the 0.5. See if there's a trend line. Oh wow, this is a must-hold trend line. So many touches, so many supports from there. And then increased momentum, trend line. That's interesting. Doesn't line up. We lost it and got bought up. And it's not an immediate buy up either. We closed under for 3 days. Saw a slight rejection from it before getting back over it. So it looks like a choppy chart. Volume, not too convincing, especially considering this today was decreasing bull volume. Yeah, I wouldn't really be touching it. Let's, how do I remove this? There we go. Okay. Yeah, ROKU. No clear anything. Essentially, if you look at this, you could call it a head and shoulders pattern, regardless of whether you use this. You know, if you look on the weekly, no, not really. So this part screws it up a little bit. I want to call this whole thing as a head, but that's not valid because, you know, if you look at this, to me it's this move. This move reminds me of a shoulder, you know, a decent move where the head and then it completely pulls back to roughly where the neckline is, and then now right shoulder, lack of follow through. Yeah, no clear pattern on this. Wedge decreasing. Okay, the only thing I see is something along that line. The only thing I see, it'd be somewhere along there. So we are trading over that trend line that's been keeping us down. There would be a bounce. You know, if you're looking at, if you are in bull positions, that's good. If you are already, but I wouldn't be playing it now. Seeing a rejection from the 0.382 already. 0.5 would make sense. You know, somewhere around, that's higher than, somewhere around there, 391, 390, 391, 0.5. I would anticipate somewhat of a run over there, but we are already a little bit extended from the 88. So don't have too high of expectation. Now, let's run over the next few. just to see if there's anything interesting. So SQ, rejection from key zone alongside this trend line. Oh, near perfect play. Volume's a little bit interesting. Yeah, volume is a bit interesting, but seeing a little bit of upper wick from the key zone. So from here, I would anticipate somewhat of a chop here, unless we break over this trend line as well as the key zone. Then we can be looking back up at the upper trend line of the long-term channel. Next one is ABNB. Big bullish action today. Big bearish action today. Decent bear volume. After rejection, failed to break over this 0.5 as well as the previous high. Support resistance at 192.47, unable to close over it. Now we're seeing harsh rejection. Tomorrow, bears do not want to, or bulls do not want to see increased bear volume. That is going to see, I would anticipate the low side of this key zone 165. PSTH. Why is there so many zones? Problem is they all make sense. See, I don't like having so many zones because then essentially they lose the meaning of key zone. If you're calling out, every dollar, every $2, even every $3 price, well, percentage wise, every percent move, 2%, 3% move. If you say, all right, if we lose, let's say, if I were to say, if we lose 24.86, we'd be looking down at 24 as a psychological support, and then you'd be looking down at 23.50. Then what's the point of that? Of course we're gonna be there. I can give you multiple targets, and then if something hits, and you say, oh, it hit. But let's try to get the purpose of Total Control Trader, the channel here, is to try to get the whole move. Projection wise, where is that whole move? Where is that stall gonna be? Same as what we're doing on SPX and NAS. I'm calling out, we're looking at likely, because we are still continuing up without that pullback, the very likely scenario is going to be that one-to-one extension target at 41.24. So I'm not going to say, all right, upon the break of this new all-time high, you'd be looking at 4,000, and then you're going to be looking at 40, 20, 40, 30, 40, 40. 40 to 40, 50, that broke, and now we're looking at 41.24. So speaking of, I think there's I need to clean up my, what is it called, Twitter a little bit. Following a little bit too many people that's been doing that, so it bothers me a little bit. Like if you're calling out every single dollar. Anyways, so PSTH, I think that's my first time bashing. All right, PSTH, unable to break over the key zone. Now we're looking back down. So this is a relatively weak bounce, given the bounce from the key zone as well as daily bull divergence. Didn't even get to the 0.5. Not liking it. Meaning, if we lose the daily, we will be looking back down at this lower key zone again. PSTH, relative weakness. RBLX, lack of follow through on this inverse head and shoulders. So inverse, left shoulder, head, right shoulder, broke over the neckline after the bounce from GP. Now we're seeing a rejection from the GP and the key resistance that I said that we must break and close over 72.47. We wicked over it a little bit, even unable to even wick over it from yesterday. And that's why we're seeing a harsh rejection now. Potential back test of this previous trend line, this neckline. But the way I'm seeing it, it is relatively weak. The bulls are trying really hard to hold this neckline that they finally broke over. But even on the move up, you can see lots of upper wicks already. So the chart remains weak. Yeah. And I got RBLX on there twice. You know what? I'm gonna BA. I think I noticed something interesting in BA. Potential head and shoulders pattern setting up with the neckline being, it's not a very clear head and shoulders pattern. What the hell is this line? Wow, there's so many lines on BA. Sorry guys, bear with me. I don't like how many lines there are. No, that doesn't work. Doesn't really work either. Most recent price action, right here. How does that backtest? Breakout, fake out, rejection. I like it. All right. Wrong, right here. Rejection, broke out, chop, backtest. Okay, this neckline must hold and is coming up relatively fast. If this neckline breaks, would anticipate further bearish action. So potential for a head and shoulder setup on BA. AC, I think we saw a hard rejection on it today. No, wrong one. Air Canada, not really a hard rejection on it. So there is a potential wedge with this trend line holding, but I am still looking at the most ideal entry from this previous high 23.55, lining up with the GP as well as with the 1-to-1 extension target right below. Yeah, 1-to-1 extension target from right below. So I'll be looking around that $23 mark. You know, you can see lots of resistances here. Break over, never back tested. Yeah, never had a clear back test. This 23.55 makes sense to me. All right, let's keep it at that. Thank you guys for watching. Don't forget to give a thumbs up. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos almost daily. Took a break. And remember, the best compliment you can give is by helping us spread the word about our channel. I would really, really appreciate it. Also, check out our website and Twitter. Website at totalcontroltraders.com. That's traders, totalcontroltraders.com. And Twitter at _TCTraders_. We offer a subscription model to our trading chatting platform, where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts with the most recent result of 87%, I want to say, between March 16th and 31st. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.